Think about a Marine who's forward deployed and finally they get a chance to get some calm and they get to call back home, and all they get is just a hailstorm from like, I can't believe blah, 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 you know, and it's like, oh my gosh. And because of, you know, their experience being in the military and being forced to move and everything else like that, having your own home it's really a big deal, right?
So
yeah, huge benefit.
And one of the things I loved about the VA loan, and you tell me if you've done this before, is you could pay off cars in it.
Totally.
And with no other loan I know of that you could do that. I believe white gloves in the future and is going to step up above the rest, especially in niche markets like the military and veteran. I don't care if you're active duty or you're a reservist or you're a veteran or you're just a civilian and want to support and our veterans. You got to take the time to learn this stuff and it'll pay off, I guarantee it.
What can we do this year in 2024 to better like equip our military for the season that we're entering into? Hey, welcome back to another episode of the Armed and Ready podcast. We have a really exciting guest with us today. I can't wait to introduce you to Billy Alt, Marine Corps veteran, rockstar real estate agent out in the Las Vegas area. And he's here with us today. And we're going to talk about all things kind of military, real estate, learn a little bit about Billy and his background. So Billy, thanks for being with us, man.
My pleasure. Thanks for having me.
Yeah, absolutely. So I wanted to kick this off a little bit because you're really tied into the veteran community here in the Vegas area.
Yes.
And I feel like that's a really important community in any city, right? As veterans, to learn kind of how to stay connected, how to stay plugged in. And I know like me personally, like when I transitioned, I moved from Reno and I moved down to San Diego.
Yeah.
I wasn't connected with the military there. And I didn't really know where to go. You know, I didn't know what nonprofits to try and plug into or different groups and organizations. Like I didn't know where my fit was. Yeah. You know, I didn't know how or where to go and how to do that and what it would do for me. So I guess give us a sense of kind of your involvement in like the veteran community here and, you know, how you help like get people kind of put in like back into the family, so to speak.
Right. So I've been a realtor for 20 years here in Las Vegas. I moved here 21 years ago from New York. Like you said, I was a Marine Corps veteran. When I moved out here, I just got my feet wet, learned real estate. I got my license out here, but it didn't start getting involved with the nonprofit and give back until probably around 2014, 2015.
Okay.
When they started VA Rep, Veterans Association of Real Estate Professionals. Yeah. And I joined that board, and honestly, the first time I've ever been on a board before. You've always heard about it, but you didn't understand it. So that was great as a learning experience. And in the second year, I became the president of this chapter. And you really get out there in the community and you realize we deal with like homeownership and sustainable homeownership and financial literacy, as you know, is very important to veterans, and they don't get enough education on the inside, right?
Yeah.
So I feel it's our job as veterans to veterans peers to help bring them along. And being a very heavy Air Force town, we have Nellis and Creech, which is a ton of active duty, but then we have a very high percentage of veterans in our community per populace. So we have probably 80% of my business is veteran or active duty, right? And we do a fair amount of business, right?
Yeah.
So it just happens to be like, if you buy the red car, you see, you see the red cars,
yeah.
Right? So same thing with the veteran community. And, you know, just like being in, if you take care of somebody, you get the whole squad, right? So, and they trust you. And that's a hard thing. In our industry, unfortunately, not everybody's to be trusted in that realm or understands the VA process. The great thing about you is you know the back end of the VA where some people, the intricacies of that loan, you could use in different ways where many people don't know how to use it. Even lenders have been in for a long time, right?
Yeah, that's true.
That's a key thing where, for me as a realtor, it's a team effort to partner with the right lenders so we can get to the final end line. So going back to the question though, like in the community, got involved with the nonprofits. Then I got into, by learning that, and we gave away a couple mortgage-free houses in that time frame.
Yeah, they do a good
which
job
is the best thing ever. Handing over those keys to
what a moment.
Vietnam veteran, like the crying that goes on. It was amazing. Like besides having my kids, it was probably the next best thing, you know. So wow. that feeling, because there's no better feeling than handing those keys over, right? So going back, then I got into rebuilding together Southern Nevada, and I got on that board, and I'm still on that board.
Okay.
It's been 7 years now, and then I learned from that what Robert's Rules was, right? And,
Yep.
and voting and all that stuff and how to raise money. It's a real business, nonprofits. And when you get to know it, there's a lot of work behind it, but it's such a fulfilling situation, right? So when I got out there, Rebuilding Together Southern Nevada helps with low-income homeowners,
Okay.
disabled, elderly, and veterans. Unfortunately, a lot of veterans, even on their disabilities, are low income, especially with the cost of living now, right?
Of course.
So we get grants and all that for rebuilding the houses to, say, like roofs, air conditioners, especially out here. It's 120 degrees. That's a life-threatening situation.
Yeah.
But there's so many people that have no running water and stuff like that that you wouldn't even realize, right?
Right.
So we get grants for that. We raise money. We got, over COVID, we were able to get a grant from HUD, and we're now in the middle of, and probably by next June, building 2 fourplexes for low-income female veterans.
Whoa.
Because we saw a need for the females to get off the street and have their own place. So that's the coolest thing.
That's
From
awesome.
being a realtor on the street to be able to get something that big, and community participation is awesome. And one thing that I love doing is when you get out there and we're shoveling a rock for these people, and we do it like in April and October, we do Rebuilding Day, and we do those houses to these veterans, the neighbors come out and help. And we're building
Oh, that's great.
communities.
Yeah.
Right? Something that I feel is missing in America right now with all the division.
Mm-hmm.
When you're out there, it doesn't matter what race, religion, what color you are, you're shoveling rock together. It's like being in the military again, you're sweating. But you're showing the community that people do care. There's no better feeling than helping an elderly veteran that maybe sometimes it's the spouses and the veterans past, and those tears, right? Like, because there's somebody that still believes in them to stay in the house, because we want them to stay in the house with dignity. Right,
Yes.
and that's what they deserve, right? So there's so much to it, but the compound effect, right? The ripple effect of when helping somebody, it just makes you feel good inside, but it changes everybody else in that day, right? So if the world could just be a little bit more positive, there's no better way to do that. And by default, you shouldn't do this to get stuff, but by default, people want to work with people they love, like, and trust, do good things, right? So I've gotten more business through the nonprofit work, but I never asked for it. It's always put your left foot forward, right? So that's what it is. Do you do stuff in San Diego?
Yeah. So actually, I just launched my own nonprofit.
Oh, really?
Called the Armed and Ready Foundation.
Nice.
So it's in its infancy. We're still kind of, it's an official nonprofit. So now we're just kind of working on what we're offering. But the idea behind it is to provide financial education to our active duty military.
Great.
So, and we're going to kind of break that down into different chunks that are applicable to our military in the life phase that they're in, right? So, for example, someone who just joined the military is, E1 through E3, they probably don't need to learn about the VA loan right now. But what would be really helpful for them is just how to manage their money so they're not running out of paycheck before the next paycheck.
Yes.
Like, so
I've been
small
there.
things.
Yeah.
We've all been there, right? And small things like that. And then that can affect your credit, and those are compounding things that make this stuff way harder. So providing education from the most simple form of finance in different courses, all the way up to like sophisticated investing in real estate and everything in between, right? So that's our goal, is to be able to present that and bring it to our active duty basis.
Let me ask you a question. So they're active duty at the time. When I was that age, it was hard to get me to see the future. I was so in different, priorities were different,
Yes.
right?
Yep.
How do you get them in the seats and to pay attention to you? What do you do?
Well, honestly, I think our ability to do that is through the command structure.
Nice.
And leveraging that network to see the value in what we're presenting and how it benefits their troops, right? So then, we always had like safety stand down briefings, right?
Yeah.
And so, those things like the whole unit's got to go, and you're like, oh, it's
Yep.
an hour of
Yep.
blah, 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 right? But if we could carve out a chunk of time there, and, the command is like, hey, look, everybody's going to sit through this basic, whatever we name the course itself, that financial course, you're going to sit through this one, and, the next briefing, maybe it's the same unit. And then we kind of just take them through the curriculum, right? And have the command kind of influence that, because the benefit for the military is a better soldier, a better airman, a better sailor, right? Because now, if their finances at home are in better shape, it will help retention in the military, because there's a huge recruitment challenge in the military. So it'll help recruitment, and then it will also help these people be sharper and better at their job when the call of duty really calls, right? We get in a conflict and they have to go overseas somewhere.
Yeah.
There's nothing harder than being spot on, focused, awesome at your job when you got heavy stuff at home pulling you down. And I know being in the military, like, we can flip it on, but the moment like the dust settles a little bit, you're back, your headspace is back there, and that may not be the ideal place for your head to be at the moment, right? Yes. And so if we want to be the best fighting force on the planet, which I believe we are, but if we want to continue that, we want to improve that, then the one thing we need to also help out is our troops' home life being less.
Well, the families,
stress.
right?
The family,
people forget about the spouses, but that's such a big piece. They're without somebody, their loved one, and they're managing the family and worried about the stress of financials if they're not set up right. So that's 100%. Like, you're changing a lot of lives that way.
I mean, think about a Marine who's forward deployed, and finally they get a chance to get some calm, and they get to call back home, and all they get is just a hailstorm from like, I can't believe blah 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 blah, you know, and it's like, oh my gosh, I was just happy to like talk to you, and I mean, it happens.
Yeah, I bet you're going to fix the divorce rate in the Marine Corps, right? Like,
Hey,
just by doing that alone, right?
Yeah.
You know, there's a lot of divorce, high percentage over there.
I mean, if we can, absolutely,
but
right?
financial, I mean, I bet you if we looked at the stats that financial literacy or financial problems is a huge part of that, family breakups, right?
Guaranteed.
So I think it's something that, you know, we can go on for days about how the schools, I don't think, teach what we need to.
Sure.
But I agree. I think it's amazing that you're getting behind the line, so to say, before they get out. Because right now, what I'm seeing the issue is they get on the street and then they start. And it's too late at that point for some of them, right? They're looking for a job, their priorities change, and that puts them backwards. But if you get them before, like you're doing, that's amazing because they start with the fresh.
And you know where this kind of spawned from? I mean, being in the mortgage business as long as I have, you know, you pull credit reports and you're looking at stuff on the credit, and you know, I'll get a young military member's credit report, and I'll see like the silliest of collections. Like I'll see like a $37 collection to AT&T Wireless, and in the grand scheme of things, that's not a big deal except for the impact that's having on their credit rating, and then that's affecting their purchase and the rate and all the stuff that goes in the mortgage side of it. And so when I call, and I've had so many of these conversations where I'm like, hey, tell me what's going on. What happened with this collection? Oh, AT&T, they did it.
Typical,
you know,
and
they're pissed, and they might be 100% right in their reason for being upset with them and not wanting to pay whatever that was.
But it affects them, not them, right?
But at the end of the day, that military member loses.
Yes.
And AT&T won all day long.
Yeah.
The AT&T doesn't care about the $37.
Just a number.
They
right?
just trashed your credit. So it's like, after seeing enough of that, and then seeing guys go, you know, they're in E4 and they've got an $800 a month auto payment, and I'm like, what's this? Oh, dude, my truck is so badass. And they tell you all about it, and it's lifted, and da-da-da-da. And it's like, I'm a car guy. I'm addicted to cars. It's a bad thing.
Yeah.
But like, there's a point where you got to be like, okay, like you're in your 20s, like you don't need that kind of thing. You know?
If you could just get a couple, I didn't have that person when I was in my 20s. I wish I did, because imagine just the compound appreciation that we would have had and pay potentially cash flow at the duty station you went to or wherever you were.
Dude,
it's life changing. Right?
Life changing.
Yeah, and a lot of people went into the military for the GI Bill because they couldn't afford college and all that. But when you're in there, you can get in and start creating generational wealth, right? And for me, personally, the VA loan has absolutely I'm on my third turn, right? Like without that, it would have changed been in a negative position, right? It really helped me leverage, and we had a good market for 10 years, right, or 12 years, right?
Totally. So yeah, that educational component is so important in compound interest, in just all of that stuff.
So you're in your first year, right, or second year? Which year are you in?
With the nonprofit?
Yeah.
First year, officially.
First year. So what? So you're getting your feet wet. You got all the paperwork done. You're actually educating them now?
Not yet. So right now we're building our education templates.
Good.
So we've got a couple people that are helping us with it, and we just sought out people who are experts in the different fields, right? Like, I'm not an expert at stock trading, but I got a guy who is in my area who's a vet, and he's a financial advisor. So I'm like, cool. So he's working on putting some stuff together. So what we want to essentially create is, you know, some PowerPoints that literally, if I had, you know, a base on the East Coast say, hey, we want that course from your website, let's schedule to come speak it, then I could arrange a veteran who's in that field of work, and there's a recording of one of us teaching it. They can watch it. Here's the PowerPoint, download it, go.
So in the future, are they going to be able to be overseas and be able to watch a video of these?
Yeah. Eventually, we'll have like a video library of all of them. Also,
that'd be great because a lot of downtime is when they're over there, right? So that would be a great time to educate, right?
Totally.
Well, I appreciate what you're doing out there because being a Marine, I know that those guys don't get enough of that education, and thank you for doing that.
Yeah, absolutely, man. So tell me a little bit about. It's kind of funny that we're in an Air Force town, and here's a Marine vet here. I live in a Marine town, and I'm an Air Force vet there. It's kind of ironic.
I started to aim high, right? I mean, listen, like we're all one team in the real world, but it's funny, like because like I have drone pilot clients, and I have people that are out there in special forces, right? So. And pilots, right? Like, you know, and as a Marine, when I was in the Marine Corps, I worked on the Harrier, so I kind of understood that side of things,
right?
An ordnance, but it's funny, like it is a blue town, right? But I deal with a lot of veterans, and the good thing about Vegas, because of the climate, and also the cost of living is lower than most other areas like California and New York. We do get a lot of elderly veterans, and they move out here because of that.
So you get a good mix.
I get a really good mix. And it's amazing to me to this day how many even Vietnam veterans don't know their benefits because it's changed over time.
Yeah.
And how the government's changed it, but nobody got the word out to them. And so, for instance, I remember my first Vietnam veteran, probably like 10 years ago, that I was dealing with this situation was he didn't realize he could use the VA home loan twice or multiple times. So he never bought. He was renting all those years. And I said, no. They changed that. You could use it again. He's like, no, you can't. And we had this fight. Like I was like, all right, guys. So we met at the bar, at the Leatherneck bar, the Marine Corps bar. And we sat down, and I said, here it is. And I was like, the VA changed it. And you got to believe me. Trust me. Let me talk to the lender. You know, and it's important to have the right lender, right? And lo and behold, he is a homeowner, and he's got equity now, and it changed his whole dynamic. Not just the house. And this is one thing about the veterans, especially with PTSD and TBI. When they have a house that they can call home versus having to move around and hop with a rental and all that, they tend to, and this is just my opinion, they tend to be more stable because they have that house they can call their own and put nails in the wall and make it their own and make their own man cave and all that. When they're moving around a lot, I feel like everything else is juggling as well. So I think home ownership is more than just money. There's a pride part to that, but also there's a stability part, right? So, and I'm sure you could attest to that as well.
Yeah, and a sense of security, and it's interesting as kind of a testament to that, right? And how important like the veteran or the military member treats home, right? And because of their experience being in the military and being forced to move and everything else like that, having your own home it's really a big deal, right? And if you look at mortgage portfolio default rates, the VA loan has the lowest rate of default.
Isn't that amazing? It's
amazing. And ironically, and I'm sure you've seen it too. I've seen it a bunch of times. I'll talk to vets who own a home or whatever, and I'll ask them, do they use their VA loan? And I'm still to this day surprised at how many tell me, no, I used an FHA loan. And I'm like, okay, well why? Maybe there's a good reason. I don't know. Maybe they had to go. Oh, my realtor told me. I'm like, why didn't you use the VA loan? Well, they told me it wasn't a good loan. I'm like, oh my goodness. Like,
you want to hear a real bad story?
Let's hear it.
I can tell on myself.
Yeah.
So I was in the Marine Corps Reserves from 93 to 2000, right? I got out and I moved on, and I moved out here. Well, my first house, I used an FHA loan because they told me, the VA, you only have 2 years. At the time, Clinton had in that you can only use 2 years after you get out as a reservist to use that. Well, 3-4 years later, I was like, I'm not even going to try. Well, they changed, just like the Vietnam veteran, they changed the rules where it goes unlimited. So I went and bought my first house, 3.5% down. It took me longer to get that money. I was broke at that point, right?
Yeah.
But if I would have been able to make one phone call to the VA or go on the portal that they have now, I didn't have it back then, right? Like the e-benefits. It's amazing how just knowledge is power, right? So getting the word out to the changes in the industry of the VA loan specifically is important, right? And there's a lot of scuttlebutt, misinformation out there on the street, right?
There's a ton, yeah.
So, yeah, but so out there in San Diego, what are your biggest obstacles with home ownership right now for veterans and military?
Right now, it's probably affordability. I mean, I think there's been a couple of recent publications that said like, San Diego is the most expensive city in America to own a house, or it's in the top 10 anyways.
Yes.
And it's no joke. It's expensive out there. And sometimes I'm surprised, and I'm doing the loans and I'm approving them.
Yes.
But sometimes I'm surprised at like the prices, and what's more surprising, not just the prices, but like the income people have. I'm like, man, the people like make some money out here. Like, I mean, it's crazy. I mean, even our military, like the BAH is really high, out there, so they can qualify for decent houses out there. I mean,
it's like $800,000 average beginning price, right? Out there.
Yeah, I mean,
right? Yeah.
Depending on the specific area, but like you're 600,000 roughly as an average to 800, depending on what part of San Diego you're in.
Right.
So it's not cheap by any means, but that's probably the biggest obstacle, and not only the affordability, because a lot of the active military can afford it. What's probably even a greater challenge is the mindset.
Yes.
Because, I mean, as the military is a hodgepodge of America, right? So they've come from all different parts of this country, and they haven't seen, in their town, an $800,000 home was the mansion on the corner. And they're going, I'm getting a regular starter home for that? Like
a square, the studio, right?
Yeah, the gears are grinding, right? Oh my gosh, what?
And I think that's the opposite here. I get the people coming from California, and they think they get double that for half the price. So they're like, yes, let's do it, right? So it's interesting, the mindset of who's coming. Like the people local don't think that, but the people coming from California think it's a great deal, right?
Totally.
So it's a whole different ballgame.
Yeah.
As far as loans, is there anything new this year that with the VA loan, or anything you're doing differently to help educate?
A couple of things I'm doing differently to help educate, depending on the part of the presentation. Like if I'm doing like an on-base or like just a VA education to vets or active duty members, one of the things that I'm really spending some time on is talking about creating wealth through real estate. Nice. And, introducing the idea of multifamily, because, prior to 2020, before they removed the VA loan limit, multifamily has always been available with a VA loan. But prior to 2020, the prices were usually higher than the county loan limits. Yep. So there was a down payment calculation you had to do there, and that was usually the hurdle that a lot of military folks couldn't get over to get into that multifamily home, even though they may have realized the benefit as a holding, right, a real estate holding. Yeah. But now it's so much more feasible because you don't have the down payment requirement.
Right. So you're zero down. You can go up to a fourplex, right? And tell me about the rents on the other three. If you were to live in a fourplex, you have to live in one.
You have to live in one.
And the rents for the other three could increase your price, I heard?
They can increase your purchasing power, yeah. So we can use 75% of that rent to help increase it. So how I build the pre-approvals for those that want it, I build them up. I give them like their foundational approval amount. Yeah. So like, here's your amount. We don't need rent. Go buy a house, whatever it is. But now if we want rent, let me show you how much rent you need for every $100,000 over that. And now you can really start finding properties that work.
Because even me as a realtor, like we go out there, we find a house. But you guys are the numbers guys. But if I had an easy, simple thing like that, it would really help. Every amount of rent X, we're going to get Y, right? So we can go up in price. So then we can get into a different price point that they never would have looked at.
Exactly.
And that's an investment they have to live in for give or take a year, right?
Give or take.
That's the goal. Like it's the intent, right, to live in there.
The intent, yeah.
And then obviously for tax purposes, 2 out of the last 5, they get free and clear up to 250 if they're single. But as far as renting the fourth one out, if they got switched on a duty station or something like that, they're able to do that, right?
100%.
Right. So
yeah, and that's the home run swing I feel like with the VA loan is like that 4 unit, right? Especially, and obviously your personal family dynamic dictates that a little bit. But if you're in a situation where you can go live in a multifamily home, fast forward 15 years from now, you've already moved out. You're renting all 4 units out now. Look at what that place is doing. Rents have increased over time, right? That's gained in appreciation. The loan has been paid down. Like, think about the value that this piece of real estate has for you. And what's crazy is like a 4-unit multifamily is basically a small apartment building.
Yes.
So you're getting a 0 down payment loan for small apartments. Now, anybody that's ever explored commercial lending or apartments,
right?
Big down payments.
And higher rates.
Higher rates, 20%, 30, 40% down payment.
Do they hit the rate on the multi-units compared to what a single family would be? Is it higher?
No.
So I mean, there's no better option then.
There's no better option.
No mortgage insurance,
right?
0 down. I mean, I wish I could go back in time and buy fourplexes everywhere I went, right? Like,
Absolutely.
and
yeah.
so the trick there, though, is for eligibility wise, right? So you're in San Diego, buy a fourplex, say 800,000, right? I don't know. Now you move, right? And you want to buy something somewhere else. As far as eligibility, do you have to refi into a conventional or to get out of that?
Most likely, yeah. Because, I mean, in San Diego area, you're going to be $1.5 million for
Yeah.
a fourplex probably, right? So your entitlements can be pretty zapped from that. And you can have multiple VA loans at once depending on how much you purchase in each one.
Yeah.
So if you're getting your first VA loan on a house, my suggestion is go as big as you can on the multifamily in the zero down, because when it comes time for that duty station change, you might go from San Diego to South Carolina.
Right.
Well, there's a clear difference in home prices there, right? So if you can sock away some money in savings, because you're not going to have to pay that full mortgage. You're going to have tenants paying the bulk of it.
You're going to have a lot of cash.
You're going to have a lot of cash saved up in your bank account. So now, we're probably not going to have the VA loan available when you get PCS to South Carolina, but there's other low down payment loan products out there, and you'll have the cash. The down payment won't be a challenge for you now. Absolutely. You got it.
But you could handle all that in your area for conventional, and because a lot of people with my VA lender, they only think you do VA, right? You do FHA conventional. You have all the options.
Do it all,
right?
yeah.
Because
bank statement,
misinformation
loans,
out there. They always go to somebody else sometimes because they think you only do. You're so good at VA, they go to somebody else for something else, right? So that's a known. But so one other question I have for you is, in a scenario where you have two Marines, say, in San Diego, can they partner on a house with their VA benefits together?
They can, yeah. It's called a VA joint loan.
Joint loan.
So it's actually a really smart way to go about it. I actually had a couple of Marine pilots do that, clients of mine, and it worked out really well because they knew their daily schedule. They're home hardly ever. They're always gone. They're at base. They're flying. They're training. Whatever. Yeah. So they're really at the house. But they knew like real estate was smart. So they decided to do a joint loan together. So they own that house. They're 50-50 partners in the house. But the nice thing about it on the VA joint loan is their entitlement is being hit 50-50.
So they could probably buy.
Now they can go buy something else.
Like, that would be a great spin, I think, especially in a high-priced area.
Yeah.
Right? You know,
it's a great way to go in a high-priced market, like a Hawaii, a San Diego, a Virginia. Yeah. Like these places are expensive.
And I think it's better to have 50% than zero, right? Than renting, right? Because you're getting free government money from the BAH, right? They're basically paying for you in your active duty time to cash flow, right? Or live for free.
Yeah.
Right? So
I tell people like the military is telling you, or the government's telling you, 3 different ways you should own real estate when you're in the military, right? You got your BAH, which is tax-free money for living, for a roof over your head. So use it for a mortgage, right? Then the IRS code says, you can deduct the interest from your mortgage on your taxes on top of that. So let me think for a sec. You got tax-free money to pay for the house. Then the government says, well, we're going to give you some of the interest back. So you're not even using all of that money to begin. I mean, it's like, and then the military says, and by the way, we're going to move you and make you do it all over again. It's like perfect storm.
And pay for the move.
And yeah. I mean,
so, well, it might take forever, but we'll get you there, right?
We'll get you there. I mean, boxes might arrive.
I mean,
one day.
listen, like, don't you wish that they would have taught this day one, right? I mean, of course, it's just like in high school. You don't learn everything you do on the street, but it's great to be able to go back like you're doing and teach these people their future without them knowing it yet, but giving them those tools to make those decisions. And like I've seen out here, Air Force pilots that when I got them, they had already bought an every duty station, right? And they were, by the time they get out in 20 years, they have a whole portfolio of properties. They're going to get their pension, they're going to get that, and they're set. They don't have to do anything.
Yeah, their pension, their disability rating.
Yeah,
I mean
that too, right?
A lot of them are going to get, I mean, if you do 10 plus years in the military, or a full 20, chances are your disability rating is going to be pretty high.
Usually.
I mean, so, and that's a really good salary that's tax-free, plus your pension. And then they got all this real estate that you've accumulated over all those years. Like, and by the time you retire, if you got in as a young person, somewhere between 18 and 22, let's say, and you did, let's say 20 years, you're in your early 40s, like you have a lot of time ahead of you. But now, if you played it right, you got a lot of options too. Right. And that's the perfect thing.
I have 2 questions that a lot of my military and veteran clients come up with, and I would love for you to answer these.
Okay.
Right? So number 1, talk about the funding fee and your options there,
Okay.
if you're disabled and or not, and then second usage and all that stuff, and if you can, how much you have to put down to knock it down. I think you could do that, right? And then I'll ask you number 2 after that. Go ahead.
Okay, so what Billy's asking about is the VA funding fee.
Yeah.
So one of the neat things about the VA loan, obviously zero down, which most people know, there's no mortgage insurance. So mortgage insurance happens on other loan products when you don't have a 20% down payment. And it's insurance for the lender, like it's not insurance for you. And it's an insurance policy. The VA loan doesn't have that. They provide a guarantee to the lender. So they guarantee the lender 25% if you ever were to default on your loan, which rarely does that happen, but they provide that guarantee. But the VA has a fee called the funding fee, and it's basically what funds this whole program that they offer. And so the funding fee is it's part of your closing costs when you buy a home or you refinance a VA loan. When you're purchasing a home, it's the only closing cost that can technically be financed. So you don't have to pay it cash. But what the funding fee is in relative numbers is on your very first use, it's 2.15%. So 2.15% of the loan amount is the funding fee, and it can be added on top.
Right.
Now your subsequent use, so meaning you use the VA loan at least one time, so time number 2 and beyond, that funding fee is 3.3%.
Got it. They just reduced that, didn't they?
They
'Cause
just
I remember
reduced
I
it.
paid 3.6. Yeah.
It got inflated there was a brief period where it did get inflated on purpose with the Vietnam Navy Blue Water Act.
Yes.
So that act came out in 2020, and what that act did, really the main thrust of it wasn't so much geared at the VA loan. The main thrust of that act was to provide health benefits for our Korea and our Vietnam era veterans who maybe got exposed to chemical agents and stuff and never received medical treatment through the VA. Right. And they weren't allowed to have it. And so President Trump created this bill. It was created in 19, went into effect in 20, because he wanted to give them some medical coverage.
It was the best thing that I've
And
seen.
but being business minded, he knew like if we put this thrust of new patients in the hospital system, well, it's going to cost more money. Like, I mean, that just makes sense, right? So how do we pay for it? So what he did is they removed the top off the VA loan, so there was no more limit. And then they also increased the funding fee. It was only for 3 years.
Yep.
So it was a little bit higher. And it's ratcheted back down to where it normally landed. But you can reduce the funding fee if you have some down payment. So, and that's the really cool thing, because a lot of people would assume like, oh, VA, you don't need any money down. Why would you foolishly put down payment?
That was my second question you led right into, is closing costs versus zero down, right? Can you go into that a little bit of what the typical scenario is for closing cost and how you could absorb it into the loan?
Yeah.
Yeah.
So to reduce that funding fee, if you do have some down payment, with a 5% down payment, that funding fee, at least on your subsequent use, gets chopped almost in half. It's like 1.65, which is basically in half, right? So a 5% down payment can actually be a pretty nice savings.
It's a good investment, I think, right? I mean,
Well,
if
you're
you look at the
investing into your house.
Yeah, because you're giving yourself money to save money, right? So
Yeah.
I think so. So the biggest obstacle I see for veterans, and I'm sure you see it out there, you were talking about financial literacy, is credit scores.
Mm-hmm.
Does the VA require a specific credit score?
No.
Yeah.
No. So there's no requirement for a credit score. So interestingly enough, the 26-7, which is the VA Lender's Handbook, which, mind you, almost every loan officer you know has never read it.
That's exactly.
But if you read it, you'll see in there that there's no credit score requirement. The VA doesn't care about your credit rating, but the lenders care.
Yes.
And the lenders are the one lending the money, so they get to put a couple rules on there.
So they have overlays.
So they
right?
what's called an overlay. So, and not every lender is created equal.
Nope.
So some lenders, like there's a couple of the big banking institutions, they have some pretty high thresholds for that credit compared to others, and some are lower. So, we have, as a broker, we have the ability. I mean, I did a loan for a corpsman this summer who had a blank, no credit score, just nothing on there, and I can go down to a 500.
Yeah.
So there's a lot of flexibility there.
Are you able to use alternative credit lines with the VA loan?
You can to establish proof of responsibility, paying stuff. Yeah.
But I don't think you could do that in many other loans, right? That's one of the benefits, right? So
yeah, huge benefit.
And one of the things I loved about the VA loan, and you tell me if you've done this before, is you could pay off cars in it.
Totally.
And with no other loan I know of that you could do that, which most lenders don't understand how to do that, but I'm sure you do, right? Where you could make a deal happen because you were just creative in how to use that if you got seller's concessions to pay off something.
Oh yeah, we had a client where we paid off their jet ski loan for them to qualify.
Right.
So it's funny, but the seller concessions, and it's funny, like on social media, I scroll and I see people that get it wrong every single time. So the seller concession, and to clarify, what a seller is a credit from the seller to the buyer, right? They're giving something to them. So they're crediting money typically for the closing costs. And for a lot of our VA transactions, the veteran is receiving some money from the seller for the closing costs.
Right now it is. It's common.
It's very normal. But the VA doesn't stop at 4%. What the VA guideline says is you can receive a seller concession for any amount that is customary in the market. Well, what's customary right now is the closing costs. Right. So if the closing costs are 2% or 3% or whatever they are, then you can get that. And it says beyond that, you can get up to 4% seller concession beyond that. So that's where
7%, right?
Yeah, so that's where you talk about like paying off an auto loan or something like that.
Or rate buy down, right?
Or buying down the rate.
I mean, that's the biggest, affordability, right? If you can get that rate from 6 and something to 4.99 or 5 something, that helps you buy more house.
Huge,
right?
yeah.
And it's big. So I think and it's just conversation. There's so much information that's out there that's wrong. And half my battle on the street with the realtors is even educating other realtors of what we can and cannot do. My biggest pet peeve is when I see on the MLS, it's FHA, conventional, and cash only. And I asked the agent, I said, why don't you allow VA? And they have all these things in their head that they've told their seller that why it's so bad.
Right.
Tell me about the VA appraisal, and what if the appraisal comes in lower, what that option is.
Yeah, so it's interesting. So the VA appraiser, believe it or not, is the same guy or gal who would go do the conventional loan appraisal.
Right.
It's the same person.
Yes.
And now they have a designation, a certification, so they can do VA. So it's an extra thing, and they have to learn it and get certified and all the stuff, right? And the reason it's a little different is because the VA wants to make sure that veteran and that family is moving into a home that's not going to financially cripple them because of repairs and is going to be safe. Free of any health or safety concerns, right? So they don't want to put them in harm's way. Like, this is their home, right? They raise their right hand to defend this land. We want to stick them in a place that's good. So the VA appraiser, on top of looking at value, is looking for any of those kinds of things. But in the instance that there is an issue with the value, appraiser goes out to the house, gets back to their desk, and they're going, shoot, I'm having a hard time making the numbers pencil on this. What they can implement is an initiative called Tidewater. So Tidewater provides a 48-hour window whereby both realtors can provide additional information to the appraiser to help. Now, the appraiser's not going to show his hand. He's not going to say, this is the number I'm thinking of.
It could be $1 or $1 million, right? We don't know, right?
We don't know.
And that's
Somewhere in
the hard
between.
part.
So we don't know the number he's coming up with, but we do know he's having a struggle getting there. So now it's on the agents to help provide some additional clarity for him, right? Some additional comps. And the advice I've been given from appraisers is, don't just give me a link with your MLS three listings there. Like, he's like, we've seen all the comps. Like, give us something.
Explanation.
Give us some info, some meat, right?
I've done one recently, and I had a nice explanation of why, and there was extras in this house, and there was a view on that one, and I actually got them to come up.
Yeah.
And it worked. And that's not the first time. There's been many times. Not every time. Of course, we know that some people list the houses too high, and we know it from the day one. But I use it, reverse psychology, against the listing agent. I said, how did you come up with that price? Because send me the comps to send to the guy, right? To the appraiser.
Totally.
And usually it works in my benefit, because you can't show me why you came up with the number because the seller told you to.
That's right.
Right?
Yeah.
That's the weak agent, right?
Exactly.
How'd you come up with that price? Well, the seller said it was. I'm like, great. I'm glad you're a professional and you told them, right? Right?
Yeah, good job.
But but there's so many different things and nuances you could do with the VA home loan, which gets me excited that most people bash the VA loan, but it's really one of the best benefits with no mortgage insurance, 0 down, and can come out truly and get your earnest money back if you do it right.
If you do it right, yeah. And then the other piece of that appraisal thing is what's called a reconsideration of value.
Yes.
So let's just say, hypothetically, we got that Tidewater, we send them info, and the appraiser delivers us the appraisal report.
Yes.
And it's $20,000 below purchase price. And now everyone's going, oh no, we
over.
got to
Throw it out. Yeah.
The deal's dead. Well, it's not. The VA has the reconsideration of value process. So now we can essentially kind of go challenge that appraisal, right? But we're not going to the appraiser, which is great, right? Because
It's not personal.
It's not personal. Like if I was challenging a conventional appraisal, which from time to time has happened, I'm going straight to that appraiser and saying, hey man, it's not right because of these reasons.
And his
And
ego's
he's
not
going
letting
like,
it happen.
I'm
Yeah.
the appraiser, you're
Exactly.
not, right? So now you got a conflict. But with the reconsideration of value, you're going to the VA. So we're sidestepping that appraiser, going to the VA, and they have a staff appraiser, and the veteran writes a letter requesting the amount. We support it with information and comps and all the stuff. And I mean, I would say 9 times out of 10, we're going to get that value.
That's amazing.
We're going to get it.
But most people don't know that, right?
No.
And most lenders don't know that.
Most lenders don't know, and if they've heard of it, they don't know the process of how to make it happen. And none of that. The other component of this, people think like, oh, it's going to take weeks and weeks and weeks and weeks. That's why I don't want the VA deal. No, this is a matter of days. Like the only time it takes a lot of time is if the realtors in these scenarios are slow.
Right.
If the realtors are quick, this can go. It's just you're only as fast as the slowest person in the race.
Yeah.
Right. Because we run as a unit.
In the perfect world, when the borrower gets you the stuff that they need signed, how fast can you close a VA loan?
10 days.
See? Everybody out there thinks you need 45. I'm like, there's no way. Like, I could do it quickly as long as my borrower works with us, right?
Yeah.
And sometimes you have issues and hiccups.
Sure.
But the VA appraiser, if you get it out there and you rush it, you can have it back in less than 7 and get this closed in 10, right?
Yeah, and most of appraisers doing the VA appraisal, they're business owners. Their appraisal business is their business, right? So they want to do a good job at their job, right? They want to get paid quickly. So that means they're going to go do the job and get it done right and do it quickly. Like they're not going to drag this thing out forever. They need a paycheck too, right?
Exactly.
So they're not in it to like stick it to everybody. And I feel like sometimes that's the perspective. Is like, oh, it's VA, so the appraiser's going to give it to us, you know?
Yeah.
And that's not the case. But I wanted to ask you,
Yeah.
So in structuring some of this, because we talked about, being able to get the closing costs paid for,
Yes.
which that isn't a function of the lender putting that together. That's your role.
Absolutely.
So how are you seeing, like, what's kind of the strategy or the methodology you use to get this put together? You get that seller concession.
Absolutely. So obviously it depends on the market. The pendulum swings. Right now, I'd say we're in a pretty even market compared to 2 years ago when we had no chance of getting anything. Right. 21 was insane. I hope we never go back to that.
I know.
But we're able to ask for, like today, I wrote an offer. I asked for 3% towards concessions. I got countered back with $6,000 on a $300,000 house. And we already knew that I'm giving them a small credit. I give to my veterans on my deals, right? Mm-hmm. And then we'll get seller concessions and a lender credit, right? So with all that together, they're maybe coming out of pocket a little bit, depending on the scenario, what their fees are and all that, but we're pretty much going to get it. Now, I just closed on a $775,000 house, which in Vegas is nice.
That's high,
Not
yeah.
San Diego low, right? But we got a full 3% on the resale market because I was competing with the builder down the block, and the builder was buying down the rate. So I went to the seller. I said, listen, you're going to never sell this house when I can go down there and get it cheaper.
That's a
so I
great
used that
angle.
against them. So I was able to get that full 3, and that was when the dip happened in October, right, or November, and he got a 5.375 with that buy down. Right,
Ooh.
Which without a builder, that's amazing.
That's
right?
smoking, yeah.
And he got all of his earnest money back with the credits. So
I hope some realtors just heard that. Like that was fire right there.
Yeah.
Like he told that seller, like, you're competing against the builder.
You got to listen. Anybody could throw in an offer. You got to pitch that offer and why I should be the one. Now I do know from the listing side that we don't have 20 offers around people lined up around the block anymore. Right? You might get 1, 2, or 3 people in Vegas. In certain price points because it's just not affordable like it was. So you have to pay attention to how long it's been on the market, if the other agent is easy to work with, and you could convince them, and then pull up the comps, of course, up front, because I always pull up the comps to know my numbers before I go into anything because it's worthless if the house is way overpriced.
Totally.
Because we're asking for concessions that aren't going to be there when the appraisal comes in lower, right?
Yeah,
We're
it's
just wasting our buyers' money.
Dead on arrival.
So I'm going to fight that fight up front. But I always ask them, I say, hey, are they considering? You got to ask the question, right? Mm-hmm. And they may be, a lot of times I'll run into where there's multiple offers, but they'll take the veterans offer or the military's offer because they have a prior service or they just are very supportive of the military. So you got to always ask the question and paint the picture, right? Totally. So I can't tell you how many times I shouldn't have got the house, but because I painted that picture, I got it. Right,
well, and that's what I love.
Right?
That's what I love working with you. And I try and educate every buyer's agent that I work with because there's showing homes and writing offers, but then there's selling the deal. And it's that selling the deal piece that gets left off so often. And it's not rocket science, but that effort is the difference between your client winning the house they really love and settling for that third one.
Absolutely. And I think the listing agent appreciates a good buyer's agent because they don't have to do double the work.
Yeah.
They know that this is going to close, right? That's the number one thing they want to know is, am I going to get rid of those other two offers because you're going to close it over those two, right? And that's where your experience comes in. Even if you just started yesterday, ask the right questions. Don't be afraid. You're representing your client. You get paid good money to do that, right? And that's why I can get into details, but NAR's lawsuit is all because we have so many people that just don't care about our industry like they should, and they're not as professional as they should be. So you got to step up. I believe white gloves in the future and is going to step up above the rest, especially in niche markets like the military and veteran. I don't care if you're active duty or you're a reservist or you're a veteran or you're just a civilian and want to support and our veterans. You got to take the time to learn this stuff, and it'll pay off. I guarantee it.
Yeah. Well, and that's why like during COVID, that's when I really implemented, like I do with our clients, is the phone call to the agent when you make the offer and that video that I send.
You do a great job with that.
And that was born out of the necessity I had to figure out something to help get these guys into escrow, because continuing to lose is demoralizing, and then they don't want to buy anymore. And you got to, but it's got to be both of us. Like we both have to be like getting in the ring.
Right. And I'll tell you, when I first worked with you, first of all, I just want to say this. I never met him in person. I met him in social media world.
Right.
And I took a liking to him. He liked me, and we said, hey, let's do this deal. You sent me a lead. And when you sent that video to that agent, I never told you this, the agent called me up and says, I love that video. That got you the deal like above the other ones because there was multiple offers. I don't know if you remember that.
Yeah.
But that little thing you did to take that 10 minutes out of your life, got that veteran a house, but also got you more deals. And then we did did another deal that next month, and we have another one in the hopper that's going to close in the next 6 months, right? So thank you for doing that. And in Vegas, I haven't seen anybody do that.
Really?
You're the first one that did it like that, the way you did. It was in detail, right? It wasn't just like, hi, he's qualified, right?
Yeah. And it's not a canned video. Like I record a new one every time.
It's not
like
it's
I
not a
address
bomb
that agent.
Set, right? Like you did it for that specific person, and that made a difference.
Yeah.
So thanks for that. And we were talking about what you could do better is communicate with the other side, right? When they send something over, respond. Hey, I got that. I'm getting on it. I'm going to talk. They just want to hear tell their client that everything's moving forward.
Right.
Same thing as a team, lender and realtor.
Yeah.
We need to make everything.
Everybody just wants to know like the train's still on the tracks.
Yes.
Right.
Yes.
Like if it looks like it's fallen off, we all just want to know, because
give me a call, please. Let's work together.
we could figure out a solution.
I had a closing that was supposed to close. I was at the signing. I signed the day before for our seller. The next day, they said we didn't qualify. The last day it closed. I'm like, how does that happen? Who didn't tell me what, right? That not only hurt my relationship with that agent because they weren't telling me the truth, but that hurt my client and me because they felt like I should have known better, right? So it's a bigger thing, right? So
it is.
And those people were PCSing. So now that affects the next deal, right? Like, so
there's the domino effect.
Thankfully, we were able to get it back in escrow and quickly close, but that's not fair. You just be professional and have the respect. Treat the golden rule, right? Like, so.
Yeah. Yeah, no, you're right. I mean, that communication piece, and I hear it a lot when I work with, because, my process, like I'm by discipline, right? Like every Tuesday I'm calling and giving that update.
Yeah.
And it's funny, like I'll announce that when I have the, contract gets accepted, I'll call both agents, but I'll call the listing agent and be like, hey man, really excited to work with you, and have that intro call, ask a couple important questions, and let them know I'm gonna be calling them every Tuesday. You would be surprised how many of them tell me, hey, don't call me. I'm like, why? Don't call me unless there's a problem. I'm like, okay, well, unfortunately for you, I'm going to call you. This is just, I'm just dialed that way. And so if you don't like it, send me a voicemail. That's fine. But
I love it. I think it's great. If I'm a listing agent and a lender calls me with an update, even if I'm busy, I just love to hear it because I know they're on it, right?
Yeah.
And I know that I'm hurt, like somebody's touching that file, right? Like, because there's sometimes you just don't know. It's a ghost.
Did it go in the
right?
black hole? We don't know what happened to
the
that
underwriter
thing.
land that you don't know about, right? So, but yeah, I think that's a level of professionalism that is necessary, especially with our veterans, right? They deserve that, right?
100%.
So,
yeah, they totally do. What can we do? What can we do this year in 2024 to better like equip our military for the season that we're entering into?
Well, I think that as we're in this environment of high interest rates, we do believe, nobody can predict the future, right? We do believe that the Fed will start loosening by mid-year. We want to get them ahead of that and explain to them what the Earl does, the IRRL, the refi, because
Not your neighbor Earl.
yeah, yes, not Earl,
The VA Earl.
so the reason why I say that is that if we get them in when it's not as crazy busy, like the minute that the rates go down to the mid fives, I believe it's going to be free for all, and the inventory is going to be still low, and the prices will go up, and you're going to have cash above, like we did in 2022 first half and all of 21,
Yep,
right?
I agree.
If they get in before, yes, they're going to have a little bit higher rate. You could get it bought down or whatever, but how long do they need to hold that property before they could do a refi and just grab that low rate?
6 on-time payments, 210 days from your first payment date.
Amazing. So now you take that mentality, right? We get into the deal, let's just say May, right? This year, the rates haven't really come down yet. They're wishy-washy around the 6, right? Then 6 months later, the rates come down, right? Everybody else is going to be fighting for the houses at that point. You already have the house.
Right.
You could then go grab that rate on the Earl, on the refi.
Earl,
It's very, like, you don't even need appraisal, right?
No, there's no income, there's no appraisal. It's like if we did your mortgage on the purchase, I need one document from you.
Yeah. And
that's
is
it.
it expensive?
No.
No, right?
No.
And then I think you miss a payment anyway.
You end up skipping a payment.
Yeah.
Yeah. And the other component to that is that time. So you got that you've been in the house 7 months by the time you can really start that process. So in 7 months' time, if all this comes to fruition, which I'm on the same page as you, I believe it is, rates are going to come down, it's going to spike values, it's going to create this frenzy. If you're already in your house and home prices start spiking up, who's winning? You're winning all day long because now you got 6-7 months of your house going. Instead of you trying to catch it up here, you caught it right here, and now you're singing all the way to the bank.
And my point is, yeah, you're going to pay a little bit higher in rate today, but imagine if you waited and had to pay $30,000 out of pocket above your appraisal to get a house.
Oh, and you paid $50,000 more for the house on
Right,
top of
right,
that.
on top of that, right?
Yeah.
So it just makes sense. And let's just play hypothetical, the worst case scenario, and it doesn't come down, they stay the same, right? Okay, you qualified, you're good, right? Eventually,
you got a house.
it's going to, got a house that you're paying. And people forget this, the forced savings part, a portion of your payment is into your mortgage, knocking down that balance, right? A lot of us from the military are not good at paying their bills. This is forced savings. So there's interest and there's principal. You're paying down a percentage. Obviously, in the beginning, it's more principal, but
More
there
interest,
is, more interest and less principal. But the point there is you're still paying some towards yourself that you would be doing 100% to the other landlord if you were renting.
Yeah.
Right? So it just makes sense.
And you wouldn't be, most of us in America, let's just be candid, are bad at saving money. So, at least you're being forced to put a little bit away, even though you can't go get it and spend it on a vacation, but it's still being saved. It's still being stashed away.
So with that, so all the people that have bought in the last few years, and let's assume that the prices do go up like we talked about, to get that equity on a refi, what does that look like to buy more property with?
So you've got a couple different options when that happens. Refinancing with your VA loan is a strong option. Depending on how the math shakes out, you can go up to 100% of the home's value with a VA cash out refinance and take all the equity out.
Wow.
When you go over the 90%, the terms get a little.
But still, 90% is great.
90% is awesome. Yeah. So that's a potential option, right? And I think it's a great way to use that equity is to buy more real estate, right? Because it's a compounding of money effect, right?
Because you were talking about teaching them investment, not just the first house, their 10th house, right?
Right.
So this I've been able to use. I would buy the property, pull money out, buy the second and third property with that down payment, right? And leverage. And the cash flow started coming in, right? It was just, that's how you start. And you just need one and then snowball.
And then snowball.
And
that's it.
I've been in the business 20 years. It's been a while. I learned from the people with wealth, right? And almost all of them made most of their money with real estate.
Yeah.
It's not brain surgery like you said before. It's you just got to start. Right, and
do
make
something.
And the VA loan, like I said, is the best catalyst if you have the opportunity to use it.
When you look at
game, right?
you look at how many people around the world envy America, right? The opportunity that we have here, and a lot of times we take that for granted, right? Yes. But there's a tremendous amount of opportunity here to create wealth, and outsiders that don't live in this country see that.
Yes.
Oh my gosh, if I could just get there, I could do something for myself and something for my family. And there's 5 ways to become wealthy in this world. You can inherit it. You can marry into it.
Yep.
You can build a big business and sell it, like a Microsoft or something like that. Or you can win the lottery, or you can build a real estate portfolio. Now, that last one, all of us for sure have the ability to try and tackle that one, or the opportunity, I should say. We all have the opportunity at that one. Those other four, probably not much in our favor, but that one we all have a shot at.
Absolutely. Like my background growing up, I'm not going to go too deep, but just an example of why that's important. My parents, I remember growing up in the 80s when the rates were really high, right?
In the teens.
And I remember hearing about the teens, and they were like pissed off because they couldn't afford it. Well, they finally saved up money, and they did a lease option, right? Mm-hmm. This was probably early 90s. And then they got a fake lease option, and they got foreclosed on. So the guy was a fake owner, stole their money. And I remember how important homeownership was to them and their face and everything. But as much as that hurt, it taught me a lesson. Because I remember the landlords always being the rich guy.
Yeah.
And my dad had to work 2 jobs to make us think we were rich, right? We didn't know we was young.
Yeah.
But when my parents finally bought again, to see the pride in their face and the smile, like it just changed their entire lives. So when I was able to buy with my VA loan and then buy multiple for my family and provide, it's more than just financial literacy or building equity and moving forward. There's a pride part and a sense of being, right? And veterans and military deserve it the most. They should own a piece of the place they fought for, right?
Absolutely.
And
without question.
I give all my military a wooden flag called Home of the Free because of the brave, right?
Yeah.
And I could give them these nice baskets and everything, but they always put it up right center because they're so proud. And I tell them, I said, this isn't just a plaque or a thing. It means something. And tears a lot of times come down, and the families even appreciate it. But in the hard days, they go back to that and they say, hey, I earned this. Let's go. Now, let's get into multiple. Now I call my sellers up, or owners up and say, hey, don't stop at one. Let's start investing. And I think that education is key because most people haven't ever been taught to get past that first one.
Right.
Right.
And there's so much opportunity out there. And I think sometimes people get stuck in like, well, it's going to take a bunch of down payment because I can only use the VA loan on this one. I'm never going to have it for the next one. But like as you're mentioning, like there's the ability to tap into that equity after it's grown for a little bit. And look, you don't have to go buy a house that's the same price as the one you're living in. You can go buy a house in Ohio for $80,000 and put that sucker on a Section 8 rental and make cash flow, right? I mean,
it's all about the money, right?
There's so many avenues to do this. That it's just getting in that first one is the stepping stone to provide you all this opportunity. And I mean, you look at like, I see all these like YouTube and Instagram stars who are like doing all this real estate and they're young and they're worth millions, but they just saw it. They saw the concept and they just went after it.
And for the people out there, because there's a lot of my clients and people in the world that are skeptical and scared right now. And for good reason, I understand, right?
Sure.
I was an agent in 2004 and I got to see the up. Well, all of a sudden 2008 came and the crash happened. The people, and that was the worst crash and probably besides the Great Depression of real estate, right? So all those people that held their properties from then on are now above 20, 25%. So my point is you're still getting a tax benefit. In the worst case scenario, you're still getting to stay in the house. And they're up over time. Time is in your side with leveraging in a loan, right?
Yes.
So for real estate. So even in the worst case scenario, those people 10 years later are up way more than they could have imagined. They just got scared. You get scared. Don't get caught over-analyzing and being paralyzed. Make sure you move forward. Don't waste years of your life saying woulda, coulda, shoulda. So that's my opinion.
It's the worst to have that regret. Yeah, absolutely. And that 2008 thing was monstrous. And it was so unique to that specific scenario, right? It wasn't
different ball game, right?
Completely different picture. And honestly, like the only reason that 2008 wasn't like the greatest depression was because of the quantitative easing. The government forcing money, the Fed forcing money into the system. That's what saved it from being an ultimate. Because what was coming next was a run on the banks. I
remember that day.
As the investment banks started to fall apart, then a run on the banks was happening next, and that's what created the original Great Depression, right? So you'd have these two huge catalysts sucking that thing down, and then bread lines and all that would have started.
And we had a taste of that not that long ago, about last year, but the Fed came in quick and they worked out some deals on the back end that we'll probably never hear about, right?
Yeah.
But they're aware of their problems from the past and they're not going to let it happen again, is what I see, right?
Yep.
So my point is the negative people that are scared of their own shadow right now, and I'm not saying you're wrong because I don't know the future, but think the numbers. Just know that you could afford it. Don't ever overdo it, right? That some people get caught in, it's my first house, I want the Taj Mahal. Well, start at a house that you could afford and think of it. I always tell my clients, you have to live in it for 2 years, and then it could be a great rental, but don't go crazy on your first house. Get your feet wet, right? And I think that makes it more palatable, and then you could grow your portfolio as you grow with it, right? So I just think that's better. So
Yeah. Well, real estate is a get rich slow
Yes.
program.
Yes.
It really is. And if you can adapt that mindset to it, it's a get rich slow. It's nothing's happened lightning speed. You know, then it feels more attainable that way.
Yeah. So this is an election year. It's going to be fun, right? Same crowd, same people, right? Like it's going to be. We can always predict what it's going to be like. What do you give advice to people making these big financial decisions during an election year? What do you think is going to happen?
It's a really good question. I think my advice to people is the supply and demand component, right? I lend in 25 states. And when I talk to any agent in any different market, they're always like, oh, we have no inventory here. Everyone has the exact same story, my market. Well, your market is the same nationwide. I mean, the Vegas market is the same as the San Diego market, the same as the Norfolk, Virginia market in terms of very low supply and a very high demand. And that is only going to accelerate as rates begin to come down. Regardless of what happens on the outcome of the election, the economic indicators are showing that inflation is coming down, and that's as it comes down, that's helpful for mortgage rates. And then if and when the Fed starts to lower their rate, that's also going to begin to help mortgage rates as well. So we're going to see this slowly decreasing mortgage rate environment, which is going to spark more and more buyers into the buyer pool. And I don't think the election is going to have a ton of impact on the decision to buy or not to buy. I think as we get closer to the election, I think we may see the incumbent try to accelerate some of those decreases, and we might see rates fall a little faster and spark things to get a little more excited a little quicker.
That's what I'm thinking. I'm thinking that politics is politics, right? So they're going to make themselves look as good as possible, right?
Kind of what I think, yeah.
So I'm excited for that opportunity, right? We've been in this sideways business for a while now and coming down, but I think it's going to be great for anybody that puts their foot forward and starts to get into the process. But I would say do it now, get ready, because the spring season's about to come up, right? We're already at the end of January, almost February now. I don't know when this is going to air, but that's where we're at today. And I think that, most in San Diego and Vegas, usually before June, April to June is probably our busiest season. Yeah. And out here it gets to be nice and hot oven about July, right? So it's slower. But then it picks up again when it gets cooler in October through November, right? So think about that. And if you have one thing as a veteran, when I was buying, I waited too long. My first house, my credit score was a little beat up. If I would have went to you earlier and started working on my credit to get it up, it saves me money, right? Because it cost me about 0.5 point at that time in that phrase because my credit was just below the certain threshold, right? But I was able to qualify, which is worth it. But I had to fix my credit and do the refinance a year later to get the lower rate. But if you start now for later, like a lot of veterans don't think about things until they want it. Yeah. Start now for tomorrow because tomorrow's going to come and you're going to want that house and you're going to be very upset that you didn't start then, right? Because you want to get it all together. So get with your with your mortgage broker and start the process now for planning for later because there's a couple things that you could probably do to educate them on moving money. Like, for instance, if you have 3 or 4 credit cards and you have that, you can move it around instead of paying it off. Instead of knocking off a full payment, you could put percentages, right? Isn't there tricks that you could do with the VA loan to make your score go up?
There's all sorts of different tricks, but the problem is some of them take a little more time than others. Yes. And if you're the last minute person who's like, oh, I found a house, I want it now, and then we get your whole file built and we go, shoot, I wish we had 3 extra weeks because I could really put you in a much better position. Yeah. Like, we just don't have that time because you want that house right now and time is of the essence. But if we start earlier, and I've had a few people just this month that I've talked to, clients like, well, I want to wait to start the pre-approval process till like closer to summer when I'm ready to buy. And there's nothing wrong with that. But my advice is it won't hurt you for us to do it now. And should we notice a path for a change or a correction or fix or whatever, time's on our side. We got time.
I think the big scare with that is that they think their credit score is going to get beat up by you pulling it up front.
They do think that.
Right? So what is it?
2 to 3 points.
2 to 3 points, and it comes back up after a couple months, right?
Yeah. So by the time you're really ready to engage, your score's going to be right back where it is. But now you've got a really good plan.
Yes.
And you've got all your questions answered. Because, I mean, you know, if you're like, I saw a house, I want it right now, you go get pre-approved, like it's rush. You might have 1,000 questions, and you're not going to get through them.
You're going to jam through it.
You're
right?
just jamming through, like, and you get the other end, you sign your documents, like, I don't even know what happened. It was a whirlwind.
It's whirlwind. And then if you have a wife or anything like that, they get frustrated because they just want to know what's going on, and it's so quick.
Yeah.
If you just plan it out right, everybody has and it helps me as the realtor and you as the lender to set up the plan and move it forward, right? And get the best deal for you.
Well, I think we got that pounded into our heads in the military too,
That's a military thing, right?
Yeah,
You know,
I mean, like, here's the plan, work the plan, right? So just prepare.
A different mindset. And you know, I was one of them, right? Like, so it took me a couple times around to figure that out, right? I still do it some days, right? Like, you know. But man, like I said, it was great getting to sit with you in person.
Yeah, I know, this is awesome.
And it just goes to show how the power of social media is these days in the right way.
It is.
I could connect with you by accident, like just out there, and we built this relationship, and we're right down the block from each other. I'm basically a suburb of California now, right?
Essentially, yeah.
I mean, listen, Vegas is having a Super Bowl. Who would ever thought the NFL would be in Vegas alone, never mind a Super Bowl, right?
I know, right? It's unbelievable.
So I'm excited for that. Who do you have in the Super Bowl?
I'm rooting for the Niners.
Okay, you're a Niners fan.
Yeah, I'm a Raider fan at heart.
Okay.
I'm a diehard Raider fan. But growing up in Reno, kind of the Bay Area sports, when it was Oakland Raiders and the Niners, like I grew up in Montana and Rice, and those guys were Niners.
Yeah.
And it was hard not to like that team. Even though they weren't my top favorite, they were close. So I like the Niners.
Yeah. But I think the Niners have that team, and it'll be interesting to watch, right?
It should be exciting.
No matter what, I think in Vegas, we win.
Wow.
And the ticket prices are the most ever. The minimum I saw was $9,000.
Oh, my goodness.
So I won't be at the
Sounds going to be electric.
Yeah.
Yeah, it'll be so cool.
Yeah, so-
Awesome, man. Well, thanks, buddy, for
Thank
meeting
you,
with me,
brother.
man,
Appreciate
and
it.
coming out
Yeah.
here. It was so much fun.